Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. While the US market is closed in observance of the President's Day, the Australian dollar briefly advanced on late Monday, but thought twice about staying above the level of 72 cents and backed away sharply after printing a high of 72.22. As the risk of an invasion of Ukraine and the uncertainty on the path of the monetary policy in the US has weighed on the sentiment. Meanwhile, the US dollar, which measures the greenback strength against a basket of 6 major peers, remains flat around 96.16. Besides the Russian-Ukraine crisis, other key factors the market will be looking for into this week and next is that the focus will remain on the US inflation along with the impending US Federal Reserve rate hike, which is seen in the next few weeks. Last week, the US Federal Reserve officials backed rising interest rates in March to curb the hottest inflation that was posted around for 40 years. Meanwhile, looking at the technical pattern, we can see we're back above the 72 cent handle. Let's see if the market can sustain again. We've got at least 4 spikes here. In light of the pattern, and also closing above the 60-day moving average, which is around, if we just touch it there, at 71.60, the fact is that there's still a little bit more room to the upside given that the RSI is still maintaining a positive sentiment. However, like previously, you can see around that 72.50 level, the market was rejected clearly. So I see little resistance until around 72.20 and then up to 72.50 before another down test. The euro, as I mentioned before, the US being closed in observance of President's Day, has decided to take the challenge back towards the support after briefly stabbing at the top side on Monday. However, with the market now pressing on at the level of 113 figure, should give further guidance lower. I feel the market is destined to take on the challenge to 112 to about 111 and reassess from there. As safe haven continues to come across from the gold and also from yen and the US dollar, the dollar yen factor is challenging the level of 114.70 and it's posted a rejection. However, technically it still remains quite heavy, so I feel the market may actually take another challenge towards the downside with the base holding around 114.1020 and reassess from there. Sterling has also backed away from the top side of its range around 136.60, still maintaining in a broader range of 134.60 to 136.60. I do anticipate the market will eventually pull back as the technicals are breaking down and therefore could see a short-term sell-off before the rebound, while the market now looks for the next Bank of England rate hike, which should limit the downside as we get closer towards 134.60. 4-month trend breaking it for the sterling Kiwi still looks towards this level of 2.030. In light of the pattern, I feel the market will eventually break this level of 2.0230 and therefore look towards the region of 2.0000. Finishing off with gold, the market still displaying divergence as well as overheated ADX, which suggests that we could see a very sharp downturn back towards 1,879 and see if the market can rebound or plummet further. Wrapping up with oil, the market still is a little bit mixed here, but still heading towards $94 and with a base holding at 86, and I feel the market may fail towards the top side and see a pullback. Well, that wraps it for today. Thank you very much for joining me. And as always, look out for the interest rate report. I hope you enjoy the rest of the day.